You're listening to The Real Well Show with Kathy Fedke, the real estate investor's resource.
Some people take title insurance for granted, and sometimes when people pay cash, they forget to get it at all. I'm Kathy Fedke, and welcome to The Real Well Show. Today, we have the title queen of Texas with us. Rachel Luna brings her vibrant personality and unparalleled pizzazz to the title business. She serves clients in Houston, Dallas, San Antonio, and El Paso. She's an expert in real estate escrow and closing services and has over 20 years experience. And she's here with us on The Real Well Show. So Rachel, welcome.
Well, thank you for having me. I'm honored, and it's a privilege to be here to discuss about my industry and what we do.
So let's just break it down. What does a real estate investor need to know about title insurance when they're purchasing a rental property?
Oh, this is the meat and potatoes, I think. A real estate investor really needs to know about what they're purchasing. And obviously, a real estate investor is going to get a property for a great deal. Like, I'm getting this property, I want to buy and hold it. They want to make sure that there's nothing that's going to come, really important for a real estate, but they want to make sure that there's not anything that's going to come from the previous owner's financial responsibility or liabilities that are going to affect them and their property that they own now. So let's just say it's a property from an estate, like the children are selling the property. They want to make sure that the title insurance is doing their job. So there's no one that might have a claim to that property that might affect their ownership and their investment. They're buying it to create long-term wealth. And then of course there's somebody comes out of the woodwork saying, hey, who sold my mom's house without paying me? Okay, great. Who do I call? Like now I bought this from this people cash, and there's somebody saying that they have a claim to this property. Well, guess who you call? The title company insurance company. And they're saying, hey, I have title insurance. Someone says they have a claim to this property. What do I need to do? Why did we close on this? And then guess who's responsible for that? That's going to be the title insurance, which is going to protect your investment, because their job is to do due diligence to make sure that you're getting a good property, good clean title with no encumbrances, debts, or liens. And that's the job basically of the title insurance company. So at that point, they do their due diligence. They say title's good, everything's paid off. This is the debt that's owed by the previous owner. They go in, they pay it all off, they clear up title, and now they invest it into you at closing. And anything that could be responsibly financially or obligatory from another person, that title company is now responsible for it from closing forward. So basically, they hold the bag. The title company says, okay, it's clear to close, meaning that now this owner, they have done their due diligence to ensure that your property that you're purchasing is going to be your property without any debts, liens, or encumbrances. So now you have this property. So if any claims may arise after your ownership, the title company is now saying that they're going to fit the bill and take care of it, because they closed on it and they insured it, and they said that was a good property purchase, and you took title on that and you paid your money to the seller, rightfully so. If anything comes up after that investment and that transaction closes, the title company is now responsible for it, insuring it. Therefore, your investment is secure.
So what kinds of claims do you see? I mean, do they come up very often?
Oh, quite often. I mean,
really?
Yeah, all the time. The claims come. I mean, some valid and some not. So I'm a part of a couple of committees in Texas Land Title Association here, and so we've been discussing some of the recent claims that have been coming up here in our state of Texas. Is airship affidavits. Airship affidavits are sworn affidavits by parties that are selling properties, and they're excluding other heirs. So they're saying, there's only three of us. 3 siblings to mom and dad, on the death certificate, there's only stated one person living, responsible party. And if they're not going to they're not going to probate the final will and testament, we're basically doing our title due diligence based on the sworn statements of these heirs, saying that they're only the 3 siblings. We file it with the court, obviously, and they're signing sworn affidavits and whatnot, saying that they are. And then here we are. We have a brother or sister that was the black sheep of the family that never got acknowledged in these affidavits, and comes out later saying, "Hey, y'all sold my mom and dad's. Why didn't I sign? Where are my proceeds from mom and dad's property you sold it? How could you have sold it without me signing? Well, then, hey, your brothers and sisters didn't include you in that. How would we don't know everyone in the, in any city, in major metropolitan, we don't know every single person who has a deceased mother or father. We don't know every family tree. So we're basing this on the sworn statements of your family members. That is something that's running rapid right now in Texas. Also, collections, rollback taxes, people not specifically specifying when someone's deceased in ownership, and the tax assessors don't have acknowledgement of a deceased person. So let's say an elderly person's getting all of the exemptions, and then the family never notifies the assessor. The assessor doesn't catch wind that the person has passed on. The family members are now receiving the benefits of exemptions of someone who's now deceased. That those exemptions no longer are valid. The transaction happens, it closes. The tax assessor finds out this was, a sub-property of an estate that was sold. They find out the person was deceased. They roll back the taxes 5 years of all the discounts these people have received that should not have been getting because of the simple fact that they're not over 65. It's not their homestead, and this was mom and dad's house or brother's house or whoever passed on's house who received these exemptions, and they never notified the assessors, and they're receiving the benefits of the discounts. And then guess what? They still want to get paid their money they're due. They'll roll it back and say, hey, this is what you should have been paying. You got these discounts erroneously, and we have the right to collect back 5 years. So, and, if you're someone who's just buying it from, without title insurance, and then you get a bill for 5 years of discounted taxes, I mean, that can go, depending on what size of property, what the taxes are, that can go from, $3,000 to, which I've seen before, $25,000 if it's a major property with large tax discounts. And that's something that's unforeseen. If you don't know this business and don't know the rules and regulations of what the assessors can do, and they can roll back, they will come and send you bills, and they will start accelerating foreclosing or whatnot on your property if they don't get paid those monies, regardless who's the owner now. They just want their monies. Yeah.
Sure.
I know, it's horrible. And that's just one of many, HOAs, it can be from very small things to very large things. I mean, but these are some of the more common, claims that arise on a regular, I wouldn't say all the time, but this is something that is more commonly seen than just the title company missing a payoff on a mortgage. I mean, that doesn't happen. But these small little things like this that are, that can fall through the cracks are something that can happen, and have happened. I mean, it's just a matter of, with the magnifying glass, looking at every detail of every item on the title. Yes.
So are there different levels of insurance that people can get? Like, let's say you're just buying $100,000 home. That would be different than if you're buying a $1 million home. Maybe.
No, it's all the same. You get the same. It's the same. It's the same. It's just different binders, but it's all the same. We're insuring the value of the home. So if you're buying a home for $100,000, you're going to get the same insurance. We do the same due diligence. If you're buying a $1.1 million home, we still do the same due diligence and provide the same insurance.
Do you ever deny the insurance if you find an issue?
Yes, we do. So some of the reasons we would not insure property are gaps in chain of title, which is where there's a conveyance chain of conveyance, and there's a gap. And we consider a gap in chain as where we cannot identify a transfer to the new owner. So just like what we do is we investigate every transfer of a property from owner to owner to owner. So we can go back to sovereignty. So we've researched chain of title to 1900 here in some of the historical districts. So, and those get very difficult, obviously, because those are more like carbon paper, so back to the 1940s, and we go really, really back. So, but basically every conveyance has to be conveyed properly. So from owner to owner throughout to the current transaction to date. And that's the one the current purchaser is going to buy. And if there's a gap, we can't identify from Chad to John, but then we have Tom, and we just see Tom. We don't see Chad in between, but Chad is now the guy selling. What happened? How did Chad get title? How did he become the owner? If Tom was the last owner and now Chad seems to be the one selling you the property, how did he get title? So there's a gap. Somebody didn't transfer title. So the last conveyed property, the last conveyance we could go back to tracking to owner is going to be the last place where we need to cure, which was cure title, is to find out what happened there. And if we cannot figure it out, then we will not insure it until it gets, there's different legal processes that can be done to fix that. But in the moment of a transaction, which is probably 30 to 45 days, it would not happen at that time frame.
Well, that's, excuse me. That's really interesting because it's like you're helping the buyer do their due diligence, but a lot of times they've maybe dropped all the contingencies and their money has gone hard. And then they find out that there's an issue with the title. So would you recommend that people talk to their title agent right when they go into contract and make it part of the contingencies?
You know what? They won't lose their escrow. They will not lose the earnest money if there is a defect in title on the seller's side.
Okay.
So if there's a defect on the seller's side, because it is part of a contract agreement that the seller has to provide good, clear title to sell the property if you're going through insurance purposes. And if the insurance company is not able to provide, if the seller cannot perform on their title piece of the transaction, then the money, most contingencies, 99.9% do get returned back to the buyer because you have a ready, willing, and able buyer, and you have a seller that's not able to perform on their title portion of the transaction.
Okay, well, that's good.
Yes.
Okay,
and so it's one of those small rarities that the buyer can get their money back after a option period and whatnot because of the seller of lack of performance on being able to sell the property.
Okay, good. Yeah. That's good news. Okay, now I seem to recall that there's different policies you can choose when closing, or is it all the same?
It's all the same. It's just different. It's just different riders, meaning different addendums. So if you're getting survey coverage, if you're wanting to get a survey, it's just variable. So if most lenders require a survey to make sure they know what their investment is and they want survey coverage, but which is, common through all common lenders, FHA, VA, commercial, conventional. But if you're a cash buyer, it's not necessarily required for you to have a survey. It's not a requirement. It's a request per, the parties involved in the transaction. So a cash buyer doesn't necessarily have to have a survey and get that survey coverage. But I always recommend that you do, for the simple fact that you want to know what you're buying. If there's any encroachments or easements of fence lines off when you're purchasing a property, and that's an additional coverage that's added to your policy. But besides a few small riders and addendums that are more pertinent to the lending side of it, if you're a cash buyer buying a property, one of the only selections that you can have is just adding survey coverage. Other than that, it's going to be mostly going to be protecting the lender and the lender's policy and the lender's investment into your property by lending you the money. And it's more of the lender's coverage where they add different riders. But in a nutshell, and as a consumer, the survey coverage is probably the only thing that you really can add on as a request for your coverage. Other than that, it's all going to be basically based on our due diligence and the sales price of the home. That's it. It's very cut and dry. Jan, is anyone asleep yet? This is the real shiny stuff.
Well, it's thrilling information, but it really is so important. It becomes thrilling if you don't do it, right?
Right. Yeah. Well, it's such an important. I mean, I cannot tell. I tell everyone, please get title insurance. Don't shortchange yourself. If you're investing in a property, protect your investment because you just don't know what's coming. If you're paying cash, use title insurance. Don't, I know everyone wants to, squeeze a penny here and there, but this is just one corner you don't want to, cut on, because it's your investment, it's your money. You just don't know. You don't know who you're buying a property from. This is maybe your neighbor, but you don't know all your neighbor's affairs and family affairs. And, those are the transactions that are the ones that always come up with issues that we're trying to resolve without title insurance. We try to help the consumer out. But, if you had insurance, you would have not had this bag of, issues. If you would have just, got insurance, probably paid a $1,500, and now we're dealing with like a large, now we're paying attorney's fees and whatnot, try to clear title for you outside of the insurance portion of it, and you're spending $15,000 in legal costs when all you needed to pay was $1,500 up front to get coverage on $100,000 purchase. Mm-hmm. So I really tell people that, people always want to cut corners on certain things, but this is just not, this is one I recommend you never cut a corner on. Get the insurance.
It would be mostly cash purchases, right? Because a lender would require it.
Cash purchases, yes. Lenders will always require it regardless. And so people say, okay, well, if it's all the same, well, what's the difference in title insurance? Why would I use your title company, Rachel, rather than that title company? Number one, as an investor, it's relationship, being the transparency of the transaction, letting you know the true what's going on with the transaction. Number two is fees. With the escrow fees change from company to company, and those are the fees that change. The fees are going to be the escrow fees, and obviously the legal fees, and those are the fees that do vary from title company to title company. And basically your relationships, the warm and fuzzies, being able to, create a relationship with a title company where, hey, you're an investor, you're buying and holding. Hey, I have a couple of properties I want to buy. Can you do me a favor? Can you pull the deed restrictions for me, Rachel? Because I want to see what I'm able to do with this property. And those once you forge those relationships with your title company, those are the type of perks and little benefits that come with those relationships, being able to do ancillary research for you for properties that you might need prior to purchasing and deciding what you're going to do with that investment. And a title company relationship can obviously give you those resources to help you as you grow as an investor and grow in your real estate portfolio, period. Yes.
Oh, very good. How is the title business changing? I mean, is blockchain, I've heard blockchain's going to be a part of it. I mean, what are we going to see in the future?
Well, definitely. Let me tell you what we are an antiquated industry for sure. We're still working on. We still do closings with wet ink and paper still, and the lenders still want that. But we definitely are doing a lot of things electronically now. Earnest money, you don't have to give a check or cash a check and deliver it to the office anymore. Now there's new different platforms that have been created to ensure where you can just the platform we use is Zocam here, where you can just take a picture of your earnest money, send it in kind of like electronic payment, and not sending your earnest money electronically to the title company in a form of a app, rather than now we're getting earnest money like in applications now, rather than old school wire, deliver cashier's check or deliver a check, personal check to secure escrow, secure the contract. Now we're doing electronic transfers through an app. We also are doing notaries now. So we're able to obviously transact transactions through electronic notaries now, and we're doing it all virtual. So we're able to do transactions. That's very beneficial for people that are buying out of state, investors that are, purchasing nationwide. They're not just going to fly over they're in LA, they're buying in Austin. They're not going to fly to Austin if they're buying 3 or 4 properties. They can do it all electronically now. Why not? So that we're doing a lot. I mean, that's something that's happening now that's very unheard of in our industry, doing closings electronically via notary, virtual notary, and crypto. That's something I'm on the bandwagon about here. And there's a lot of lenders that are accepting cryptocurrency now as a form of, they're letting people do crypto exchange in reference to dollars to purchase properties now. That's something that's now trending. Now we're writing new writers and addendums here in our state in reference to how we are accepting those dollars and how we're protecting ourselves in the insurance piece of it in reference to non-taxable dollars that we're receiving from this currency entities. And so that's something that is coming now. And that's something that we're actually writing binders to protect the title insurance companies, and also protect the consumer that's receiving the money on their currency exchanges on the value of the properties. So that's coming really fast. Wow. And that's exciting.
Amazing.
Yes. So cryptocurrency, hey, who would have known?
Yeah, we're going to be looking at a very different world in 10 years. And
absolutely. Absolutely. Yes. Yes. So, and that's exciting. And when I talk about that to a lot of like the new techie people, like, wow, that's so exciting. And it's all coming from California.
Woohoo!
Yes.
Fantastic. Well, Rachel, thank you so much for being on the Real Wealth
Absolutely.
Show. Yeah, hopefully you've saved some people from some difficult transactions.
We definitely have. And you know what? As always, ask questions, get a great partner that does title. If you're doing, ask the questions. If you create a partnership with someone that's doing title insurance in your state, in your area, pick one or two and forge a really great relationship and partnership with them. And they'll take you a long way in this business because they are a valued resource in any real estate investor, purchaser in this business. And that's my golden nugget to all of you guys out there.
Fantastic.
Right.
We'll take it. All right.
Thank you so much. Y'all have amazing. Thank you for having me. And I can't wait to see all of this come out. Thank you so much.
And thank you for joining me here on the Real Wealth Show. You can find more ways to protect yourself at our website at realwealthshow.com, where you'll get a whole lot of free webinars to show you how to get the right insurance, whether it's homeowners insurance or title insurance, and how to get the right asset protection, and much, much more. Again, that's at realwealthshow.com.
The views and opinions expressed in this podcast are provided for informational purposes only and should not be construed as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, go to realwealthshow.com.